Hey guys, welcome to the Family First Life USA podcast. My name is Stephen Yee. In front of me is a very good friend of mine and top producer and a senior VP, Mr. Brandon Kitchings. We're going to have some fun today, Brandon.
Yes, sir.
So Brandon, can you quickly tell us your background, your what industry you came from, how you found Family First Life and all that good stuff?
Yeah, so I was in the mortgage industry prior to FFL. Had been with one of the biggest banks here in the country for almost 12 years before finding FFL. So I've done a little bit of everything under the mortgage umbrella, from foreclosures, escrow, customer service, modifications. When the market crashed back in '08, '09, spent a lot of time there in the modification department.
You were in that, huh?
Yeah,
How was that like?
man, I was on the front line, taking those calls from clients that, maybe just lost their job. Husbands, were laid off due to corporations going out of business, and now they can't make their mortgage payment. So having to take those calls, to try to help that family salvage, what they've worked so hard to obtain for their family, which is their biggest asset, their home. And a lot of times it wasn't easy because I knew on the other end that they were not going to be able to keep the home from the first time I spoke with them on the phone. But
Right.
my job was basically to give them hope. Hey, try to do what you can. We're here to help.
Right.
In the background, knowing that the bank wasn't,
Ain't no way you can help.
yeah, it wasn't going to do it. And a lot of it just came down to the numbers. At the end of the day, that's all the bank cares about, right? Is the numbers, the profit, and if you can't afford it, you don't care that you just lost your job due to a big financial crisis in the country, and you have kids that need a place to live. They don't care.
Right.
Can you make the mortgage payment? You
Right.
can't. Then we got to get you out of there and get someone in there that can.
Right.
And capitalize back on that equity that you're now losing and passing over to the bank as well. So it didn't feel good. Having those conversations. Families crying. Wives crying on the other end. I remember one in particular where the husband committed suicide, because he lost his job after about 20 years,
Wow.
and the wife was a stay-at-home mom with 4 kids, and she was like, "What am I gonna do?" And I guess they didn't have life insurance at that time. I
Right.
wasn't really into the life insurance, but I guess they didn't have the life insurance either because she couldn't pay. And the fact that she knew that she was going to have to get out of the house with her kids. And I just remember that day she was crying over the phone, and I'm just, doing everything I can to, be empathetic and, console her and let her know that, life moves on. And I'm sure, God don't put anything more on you than you can't handle, so evidently, things happen for a reason, but, I'm not sure God will get you through this, right? So it's just those type of conversations that I would have day in and day out with people that are, you know, at their wits' end, have no hope, ready to give up. But then there were some people that were able to help as well, and those did feel good. It felt good to know, that I was able to, keep a family in the house, get them to an affordable payment that they could maintain until they got through this storm that they were going through. But for the most part, it was more heartache than helping.
Right. How did you find Family First Life?
It was actually through an acquaintance of mine that I met when I moved out to Arizona, prior, and I was at a point in my life where I just knew I wanted more. I was coming up on 40 years of age, right? And I remember as a kid, I thought I would be retired by 40,
Right.
right? And here I am, still working hard, doing 60-hour work weeks, in a cubicle, trying to get that American dream. And I remember talking to my wife one night about, hey, I really need to try something different, because I'm doing more and more for the bank, and it was one of those things where I was hourly, like $15 an hour plus a commission, So with the home equity line of credit, that's when you have the equity in the home, and you want to use that equity to help yourself pay down some higher debt that you have,
Right.
credit cards, things like that, to help people save money on interest that they've already committed to.
Right.
However, with that, when you put it in place, it's a line of credit, so most time people don't actually use it right away. They just put it in place, and they have 10 years to actually access the money, and so you don't pay any interest until you actually lose some of the money.
Right.
So the goal there was to get them to pull out as much as possible in the beginning
Right.
to start the interest clock for the bank,
Right.
right? And so we would get a little bit more if we got them to pull money out right out of the gate versus just sitting on it and using it down the road.
So you're almost like, in a way, trying to get them to get into debt.
Yes.
You're taking money out of their house to pay off debt, but then they have another debt with the bank.
Yes, sir.
That's crazy.
Yep.
How did that feel for you? Like, I mean, you just did it because it was a job. I mean,
For the most part,
Right.
I 6 kids, and the benefits were great,
Right.
right? So the typical American dream is get a job with a corporation,
Right.
right, company, and you stay there for 30 years.
Golden watch.
Right, good
Right.
benefits and barely get by, but at least what else is better, right?
Right.
There are worse things that you could be doing.
Right.
So, and I'm not to say anything about anyone that took that route,
Right.
because that's what my mother did, and that's what my grandmother did. They believed in working hard for a company and giving and being loyal and staying there and retiring and taking your Social Security and your pension. And it's done wonders for them.
Right.
But for me, I just had bigger goals than what they may have had. So that wasn't my reality.
Right.
I did want an opportunity to maybe retire early to help pay for my daughter's weddings. I have 5 girls. I would
Right.
like to help pay for those weddings.
Exactly.
There's no way I would be able to do that.
How did you, I mean, when you found Family First Life, you got in, you dove in and you started, protecting families and all that good stuff. But, for the folks that don't understand it, that, let's pretend like someone in here watching the video right now came from the mortgage industry and they're going, why should I look at insurance? Well, why should they, Brandon?
Man, first of all, freedom. That was the biggest thing. In the mortgage industry, you're going to be at a cubicle for 60, 70 hours a week. I don't care who you work for. It may be even more, because that's what's required. You need to be there at that cubicle taking those calls, and they're going to, tell you when you can take a break, when you can go to lunch, when you can take a vacation, when you can't take a vacation, due to business needs,
Right.
right? So if you're looking for freedom, that was the biggest thing that I love about this opportunity was I have the freedom to work from anywhere that my cell phone works,
Right.
right? So it's nothing for me to take my family on a vacation and still be able to work while we're on a vacation,
Right.
versus we can't go because I couldn't get off this time.
That's what I was just talking to somebody about earlier. It was, if your daughter had like piano recital or dance practice or something, like at your job, like trying to get the time off to attend those things, like you got to ask for permission. Compared with us, you can just go, you know what, usually I run appointments at that time. I just run appointments at another time. You're just rerouting it to fit it in your schedule because family always comes first.
Correct.
Right. And that was the beauty of having the schedule and the flexibility of what we do here too. But, what blew my mind away was and how long would it take for you to get someone through a loan?
For the process, typically maybe about 45 minutes. Maybe
Okay.
about 45 minutes over the phone to find out exactly what they need. Kind of the same scenario that we go through here at
Right.
FFL. Establish the need first, and then offer the solution.
Right.
So going through that process was about 45 minutes. Sometimes a little longer, but even if you went 45 minutes, you would hurt yourself. That was the thing about the bank as well. They want you to value the client and be there and fully assist the client, but you have a time limit. Right?
Right.
You have a time limit.
Do that, but you only got 15 minutes to do it.
Right.
Right.
Correct. And anytime over that, they're docking you.
Oh, wow.
They're docking you. In terms of your commission, things like that. You're getting docked. So for me, I just always took the stance of I'm here to help the client, and I'm always going to put my clients first and give them the time that they need. I'm never going to rush my people off the phone just so I could maybe save $5 on my commission.
Right.
Because it's about making sure that they're getting exactly what they need and educating them on everything that's taking place. And I would always get fulfilled from that because after each call, a lot of calls, I would have people just thank me and
Right.
ask for my direct phone number to the bank. Like,
Right.
can I call you directly? No one
Right.
has ever spent that time with me. No one has ever broken things down to me the way you did, Brandon.
Right.
I know so much more about my mortgage now.
Right.
Is there any way I can get your direct phone number? You
Right.
know, and for me, that's what it's all about.
And see, that's the thing is like you got a big heart, right? And it's like for folks that actually have that in place, what I mean by that is like you care about others more than you care about your paycheck. If that's who you are as a person, you thrive in this industry. Because at the end of the day, you know, when you put life insurance on a client, you're not doing it to hurt them. Like no one's ever died and said, "I wish I had less life insurance." Right. Or, you know, no one's ever died and go, "I wish I didn't have any insurance at all. Like, screw having money for my family. Let's give them nothing." Like, it doesn't make any sense. But compared to, like, you know, where you were, where you're putting people in loans and trying to get them into debt just so you can squeeze a little bit out, like, that's hard because, like, you know, kind of like, you know, Bruce, we were just talking about with him and the auto loans and stuff. And I'm like, you're like trying to kill me on an interest rate so you can feed your family, which I get. You got to feed your family too, but I got to feed my family too.
Yep.
So like I'm trying to come up with the difference to try to feed your family instead of like see with insurance is like we're on the same side. It's client and us on the same side against the carriers trying to get them approved.
Correct.
You know, and so like when you can come from that position where you're trying to help people and you genuinely feel that way, the commissions don't matter. See that what I realize in this industry too, Brandon, is like when we sit down with clients, a lot of agents, there's a lot of bad insurance agents out there. Let's just be real quite honest about that. They have 100% commission breath. All they're thinking about is when I'm sitting down with Mary, how much money can I get Mary to pay so I can get a fat commission up front? Although that's a good thing, but it can be a bad thing because you can put them in the wrong coverage, this, that, and the other, right? The beauty of what we do is like there's so many times where you and I we've talked about this. We're like, hey, if Mary can't afford. The only thing that we care about is like if something were to happen to you, Mary, that the insurance is still in force. That's all.
That's it.
And it's like when you come from the place of helping people, man, you know, karma's a big deal. It comes around.
It is.
You know.
And for me especially, you know, the whole reason, one of the reasons why I joined was because we went through it ourselves. You know, my wife and I with her dad. You know, when he passed and not having life insurance, so we experienced what that feels like to go through it without the life insurance.
Right.
And so for me, it's about helping families not go through what we went through.
Right.
At the end of the day, and so from my job is to educate them thoroughly
Right.
on these
You're
products.
doing nothing different than you did as a mortgage lender.
Exactly. Educating them thoroughly, giving them the opportunity to make the educated decision for them and their family.
Right. You know, speak about the business model that we have here because that was one of the things that I was really attracted to the insurance business about is, you know, residuals or renewals, those two words, like most people in America don't know what that means, or if they think they know what it means, but they really don't because it's only really reserved for entertainers, for musicians, actresses, where like they make a song one time and it plays on the, you know, radio forever. They get paid every time that song gets played. Same thing in, you know, with movie actresses and stuff. Like if they make a movie for Paramount, for example, and they play on, you know, TBS or TNT, they get paid every time that movie gets played.
Correct.
Right. In the loan office, in the loan, you know, lending industry, you don't have that. Where like if I got my loan today and I have it for 30 years, let's just pretend, you don't get a check
No.
every month for 30 years.
Nope.
No chance.
Nope. The only way I would get another check off of you is if this you lost that home
You had to refi again.
or you refinance, right? If you
Right.
refinanced, or if you lost it to foreclosure and then now you finally got your credit back good again to buy another one.
Buy another
Then
one.
I would get a chance to to make money off you again.
Right.
And a lot of that's what I love about FFL and what we do here. It was the mortgage protection is really what sparked my attention, because I got a chance to learn that there really are products out there that help someone protect their mortgage, which is their biggest asset typically.
For most people, yeah.
Right? It's the biggest asset. So why are we not protecting it like it's the biggest asset? But in the bank, they never taught us. I never knew what mortgage protection was.
Right.
12 years doing it.
Right. People pay PMI though, and they think it's
Yes.
mortgage protection,
Yes.
but they think it's for their families, but it's
Correct.
actually protecting the bank.
Correct, and that's because that they're in our training. There's specific ways that they have us talk about the PMI that may lead them on to something, even that it helps them.
Right.
And it's kind of a tactic where we kind of put it out there, but you really don't talk much about it because you don't want to open up the can of worms. with it either. So, just so with that, when I saw that and getting mortgage protection leads and calling people, and the first thing they tell me was I already have mortgage protection, and then I'm like, okay, who did you get it with? And then they're like, through my lender, right?
Right.
And I'm like, no, right? So for anytime I get someone like that, I got to make it my business to get in front of them, whether they book the appointment or not. I'm gonna at least come knock on your door,
Right.
talk to you face to face about that PMI that you think is protecting your family,
But it's actually
and
protecting the bank.
educate you. And 9 times out of 10, once I educate them, they're like, wow,
Right. Why do I even pay for this?
yes, because you have to.
Because you have to. That's
Yeah,
the other
that's why.
thing.
Because you
You're
have
right.
to. Yeah,
Right.
you didn't have.
So what happens is what I've learned is sometimes you can call in and they'll take it off, or most times you have to refi it out. The reason why they want you to refi it out is because the lender gets to make another commission
Gets
on
to
it.
make another commission.
Right.
Or if they do make the decision to do it, so if the lender can't make, it's not the lender making the decision. That's how I try to educate people. It's not your lender. So if your loan is with, this is, for like one of the banks, right?
Right.
That's not the person making the decision to remove the PMI. It's not the bank. It's the actual, the person that invested on the loan. So the person that actually put the money up for you.
Oh wow.
Yes, whether it was Fannie Mae or Freddie
Right,
Mac
right,
or
right, right.
whoever the investor was that
Right.
put up the 300,000 for you to get the loan, that's the person that gets to make the final decision. So the bank, and when you call in and you say I want to remove my PMI, typically what they're going to say, okay, you need to get an appraisal done.
Well, going back to the renewals thing, that's the thing that I was so attracted about our business, not just insurance, because not all insurance companies are created equal. Only a Family First Life, where we can sell a policy today, and then in the next year, and then the second year, and then the fifth year, and then 10th year, if the client keeps the business, keeps the policy, we get paid over and over again, for protecting families, and that's what's so attractive about our business. I mean, Brandon, for those that are looking into Family First Life or looking to just get started with the insurance business, that are from the mortgage lending business, anything that you would wrap up and tell them about like why they should work here?
If you believe in yourself, that's my biggest thing. Is if you believe in yourself and you believe that you're worth more than what you're currently getting, then it's a no-brainer to give Family First Life a try. You're already doing the exact same things in the mortgage industry that it requires to be a successful insurance agent. You're already doing the exact same things. Will you maybe have to learn some new things? Yes.
Right.
But even in the mortgage industry, we're constantly learning there as well.
Right.
They require training every year.
Right.
That you have to do to stay on top of your game.
Right.
So it's the same thing here. So my biggest thing is you're already working, you're already putting the hours in. You could put those same hours in here for yourself and your family, and buy back your time for your family as well. Being able to spend that time with them. So if you're out there and you're in the mortgages, you're doing anything actually outside of what we do here at FFL, and you really want more, give us a call. Check out the links, check out the videos, give us a call, speak with one of us so we can, help guide you, down the right path, to financial freedom.
One of the things I will say, and I can advocate this on your behalf, Brandon, is I've had the pleasure of working with you for the last 2 years, and like you truly care about helping people. Like you want them to win almost sometimes more than they want to win themselves. If someone that's watching this video, they're nervous or they have questions or they want to even have a chance to work with you, what's the best way for them to get a hold of you?
Best way to get a hold of me, you can definitely check out the website, fflmarathon.com. You can give me a call direct as well, 480-528-0724. I will definitely pick up the phone, take your call. If not, I'll send you a text, let you know I'll call you back. But I'm here to help anyone win.
Perfect, man. I love that. So, Brandon, thank you for coming on. And we're so glad to have you here because this year, just in your agency for the year, like, dude, I'm so excited to see you grow, man. Help a lot more families. So, Brandon, thank you for hopping on. Thank you guys for jumping on. If you have any questions, feel free.